In the case of both Poland and Hungary, the downside risk for growth came mainly from external factors, for example, Brexit. Marcin Adamczyk, NN Investment Partners. Retail sales in Hungary and Poland are out today. What can you tell us from these releases?
They came out quite strong at 5.7% increase year on year. That was beating the estimates of the increase of 5.4%. And the level of 5.7 was the same level as the last month reported for the month of May. The retail sales in Hungary in the recent months have been coming out either at the level of 5% or above the 5% threshold, which I think is quite healthy. In Poland, on the other hand, the number for June that was reported last month was again an increase of 4.6% year on year, and it was also beating the estimates, which at the time stand at 3.7. I think then in case of both Poland and Hungary, the downside risk for growth came mainly from the external factors, like for example Brexit.
Speaking of Brexit, how did Britain's vote to leave the EU affect the Central and Eastern European nations economically?
In that case, there are several potential channels of impact. I think the first one is the direct one, is the drop of the export from those countries to the United Kingdom. In case of how big is that in terms of magnitude, export to the UK represents around 4% of the Czech GDP, 3.2% in case of Hungary, and around 2.5% in case of Poland. Obviously, it is naturally higher than for other emerging market economies that we look at, yet those numbers are percent not extremely high. So therefore, I think the impact of that channel should be at the end limited. Another channel is potentially the lack of new foreign direct investments coming from UK and ending up in the regional countries, in CEE countries. That links as well with the potential outflow of the profits made on the already existing FDIs that in those countries that would now be probably reinvested or will be repatriated to the UK, and otherwise they might have stayed and be reinvested domestically. On that matrix, Hungary seems to be, on the FDI matrix, Hungary seems to be potentially more exposed than Poland. And finally, the most important factor in my view is the potential impact of the general economic growth slowdown in the whole of EU, and that would naturally affect the Central and Eastern Europe economies as well.
What leading indicators should investors keep an eye on before investing in Eastern and Central Europe area?
I think the assessing or the impact on the external risk, we need to monitor predominantly the export performance of those countries. And for assessing the counterbalancing things, so the resilience of the domestic market, things like retail sales, that's clear. But I think, however, that recently the bigger market driver, in case certainly of Polish assets, was the developments regarding the presidential proposal regarding the conversion of the Swiss franc denominated mortgage loan. The market was obviously fearing that the burden on the banking sector would be very high, and it will come with an immediate effect, basically eroding the potential profits of that sector for many years to come.
Thank you for watching this broadcast today. Don't forget to click back for more broadcasts like this. Goodbye for now.